What's happening, guys? Another Sunday scan coming at you. This time is for the end of June. We're going to end up in July by the end of this week. And we've got July 4th coming up, and we have a short week next week. So keep that in mind. First and foremost, as I said, if we got 1,000 likes, we're going to do a bundle and a free quarterly. However, we didn't get there. So Sean Perez, you get a free month of IU, and Jeremy Akuno, you've got the free shirt for IU. All you guys got to do is leave your key takeaway. Every single week, I pick somebody off the comment section, in this case, two. But if we get to 1,000 likes, I'll be doing a quarterly and a bundle for you guys to enjoy. We had a pretty busy week last week. We had a lot of crazy moves once again. We had a lot of gap and fades. We had a lot of continuation plays. You know, Space SPCE on Friday was insane, and it's one of those that we've been talking about where, you know, once that volume starts clicking, you just got to kind of trust it. And no matter what your bias is, you know, you have to go into either trader mode or just join the trend. So you either needed to join the trend long, or if you were shorting it, then there was plenty of short trades in it. There was plenty of opportunity. But you had to respect the key levels. Key levels looking left, they were pretty clean. They kept the same lines every single time. And I think that's super, super important. We can review it a little bit, but I think that as a trader in this market, if you are participating as a, you know, kind of contrarian view, you have to make sure you're looking left. You have to make sure that you're looking at prior levels of support. And you should assume that they hold, because if you don't, then that was probably your cover spot. So for me, I always like to remind and you know, suggest to the room, hey, you know, here's your key level. If you're not adjusting risk, you know, make sure you have a plan, right? Because for me, I'd rather be covering into those levels, assume that they're going to hold, and if they don't, great. If it starts to get heavy and continue to, you know, fail and fade off, then I can always re-add. But more often than not, if I don't cover into those levels, the rebound is fairly quick. So you go from being up nicely to down quickly, or even flat quickly. And then you're faced with the kind of the decision, which brings out most of your weaknesses for most traders, you know, where you just were up and now you're flat, now you're down. Do you hold? Do you get out? And, you know, that's the tough part for a lot of traders, especially me. And that's why I always am a broken record at these key levels, because it's a good reminder to myself, hey, adjust risk, either get out, you can always re-add. And by going through those motions and reminding the room, it also helps me, right? So, pretty wild stuff. And, you know, who knows what we've got for the week ahead on SPCE. You know, the 60 calls, there was a lot going on there. And, you know, it might turn into something wild. I mean, it was top on the Wall Street Bets algo this week. We had a lot of good stuff from that, which, like I said, I was going to have something coming very soon. We've got a few more tests, and I think we could probably launch it this week. It's currently live, but we're just kind of soft launching it, soft testing it, just to make sure. But there's going to be a nice opportunity for you guys that aren't even in the room to be able to kind of start to monitor these things as well. So first and foremost, I'm going to get right to the questions and then right into the scan, because I'm heading to the Red Sox game today with my dad, and I've got only a little bit of time. So, you know, I'm not going to sit here and say this is going to be shorter than normal, because every time I say that, I jinx myself and it ends up longer. So, first question that came in, an area that I find myself struggling with is an exit plan. I've always have an entry and a thesis where I would be wrong, but I find myself just covering and selling along the way into the big moves. Not really a consistent approach that it seems, because all the trades are working still. So, you know, basically my understanding of that is, you know, you've got this big picture plan, but you're still kind of doing that micro look. You're still looking at, all right, it's just moved to my direction. I'm going to go ahead and take some off. So I think that's good no matter what, especially if you're building an account, that you should be looking to lock some in if and when it flushes out. It just depends on, you know, what kind of move is it? Is it just a slow and steady grind down? And then if so, that sort of move can actually last longer than you think. Just like SPCE, we were talking about it regarding the long side, or at least not shorting, where there hadn't been a stuff move, where it hadn't really sped up, and it was just sort of, steadily grinding along the way, right? And so there wasn't any of that exhaustion, big move that says, okay, that could be a top. That could be that point where everybody just said, you know what, the hell with it, I'm out. Cover their position, people sold, and it starts to come back in. There was never any of that. And so I think the same thing if you're on the short side and the trade's working and it's just slowly, steadily kind of fading off and it's rebounding along the way, but not really breaking any downtrend, that can last a lot longer than you think. And so for me, whenever there's a flush that kind of fades out or gets out of that current trend that it's in, for me, that's an edge to maybe go ahead and size back down. Because one, if it pops back up, I'm happy and I can always resize. If it stays heavy, I can also always resize. But it just really depends on where you're at in your trading career and whether or not you're, just kind of, I think I mentioned it last time, but are you in the income stage where you're trying to get as much income as you can out of the market and build that account as quickly as possible? Or are you in more of the wealth building where, it doesn't matter day to day if you take a paycheck out, but you're kind of focused on this big picture, big macro view. And I think that there's two different, scenarios there. And you kind of have to figure out which one you're going for. And if it's the macro view, the wealth kind of building, it doesn't matter if I make, my pay today kind of thing. I think that is where you should end up. But not everybody's there yet. If you're a 30K account, 50K account, 100K account, you're not there yet. It's still better to just keep on building and building and building. So I wouldn't get discouraged if you're, locking in along the way, but, just kind of monitor what percentage, are you only holding 100 out of 1,000 shares, for the full move? Then yeah, maybe you could work on being more patient on at least half. But, it sounds good that you have an entry and an exit plan along the way. It sounds good that, you kind of, and I think this is an important point. A lot of people always ask me what my stop is. And so for me, I typically have a guide for my risk. And otherwise, when the trade starts to change, if it starts to go away from my thesis, then I'm going to go ahead and move on. When are you going to be wrong on a particular trade? You don't need to always wait for a stop. I really don't like seeing, a couple of my friends, they have this hard stop, they're up huge, and, they're going to continue to wait for their risk. And they turn this great trade into an even trade or even like a normal stop out. There's no reason to go all the way back when all the signs are there that, hey, the downtrend broke, it started to rally, it's continuing to rebound. Why would you give back that entire day of profit? And don't get me wrong, it happens all the time. Wish was a huge trade for me earlier in the week, and once again, I end up minimizing it. And that's going to happen all the time. It's going to happen Clove and Wish and AMC, and because there are going to be those days where you're like, I just want to, keep my size for this huge unwind. But then you remember that we're in this meme market and, there's no such thing as pullbacks anymore. So when and if you do get that flush that I was talking about, and just like you saw on Wish, WISH, when, I had mentioned where the floodgate kind of would open up, and you saw there was like a 3 million share bar that came down, just flushed out, completely unwound. And you know what? That was the best cover of the day. That was the best spot to cover into that spot where they just opened it up. All the stops opened up, all the volume came out, and then they started to slowly, hold a higher low and grind it back up. So I would just kind of go through the motions. I always tell people, how are you so patient? They say, and like how do you let this thing work? Just go through the motions. Hold 100 shares, and get your brain kind of in the mode of, I'm going to be patient with this trade. And then you slowly might hold half or maybe the full size, whatever it may be, But then there's always that, I'm going to play devil's advocate here too, right? we start going sideways, and then you're being patient, it's trading, it's working, it's continuing hit lows, and all of a sudden it takes that rally back into the close. So anytime that it's straight down without any reason for shorts to cover, that is my reason for cover a lot of times, because I don't want to be competing for the offers at the same time when everybody finally has that first reason to cover. So kind of think about that too. If there's a lot of reasons along the downtrend to cover, then that's great, because that can last a lot longer. If it's just straight down, there's no reason, as soon as that turns, there's going to be this compound effect where everybody starts to kind of chase each other and jump over each other, and then cause that squeeze into the close. So just be aware of that. Next question: the psychology of an overcrowded trade that's being too afraid to pull the trigger, capitalize off price movement when the lucrative opportunity presents themselves. So this is something that I think that I deal with too a lot, where you see everybody on the same trade, you see everybody talking about things. So for me, I think that time, that number, that spot is wait until 9:45, 10 a.m. plus and kind of reevaluate your decision, because before that, 9:30 to 9:45, the market hasn't really developed yet. And you've got some newsletters whose sole purpose is to try to circuit halt names, right? And so you could be dead right, 100% right. And it doesn't matter if it's 9:37 to 9:42. Well, guess what? The market hasn't really developed. Everybody's kind of like, well, could this be the runner of the day, or is this going to fade today? And then when some force comes in and tries to circuit halt with, thousands and thousands of members, you could be dead right. But for that minute or two, you're wrong. And, whether or not your risk is in check, you're going to find out. So I always like to let things develop, 9:45, 10 a.m. plus, and then start to think about, if it was an overcrowded trade, how is it unfolding? Is it staying heavy where I thought it was going to, or is it still kind of threatening? Because here's the thing. Right now, crowded trades are actually working well because nobody's selling. Everybody is trained, AMC and Wish and Clove and all these names. Everybody's getting rewarded for bag holding all the way down, right? And also being rewarded for a holding. AMC, I was dead wrong. Dead wrong. I never would have imagined that it actually would turn into a stock that goes to $70. And GME, obviously, that's stuff that you've never seen before, right? There's a first for everything, that all of a sudden it happens again. And I think that there's a lot of that speculation right now where, this is the next one. This is the next one. So what happens is a good portion of that float gets soaked. People are being rewarded for holding. Not all of them are going to do it, but people are being rewarded for holding ridiculous moves right now. And so because of that, things are actually working on the crowded side, because I feel like the bias comes in. Oh, this is crowded. All these longs, all these people are promoting it. All these people are pushing it. It has to pull back at some point. And there's just so much demand, and the only supply is coming from shorts, right? So then all of a sudden you've got this, this churn, and bam, you've got that second leg. And you saw that with ALF. You saw that with a bunch of other names recently where they're hanging around longer than you think. ATOS is another example. 100% sell the news event. Everybody knew it was sell the news event, if they PR'd what they PR'd. And they did. So people sold it, people shorted into it, no brainer short. Guess what? Retail crowded name, they're not selling, and everybody that just came in on the supply side was short. And then here we are, and they're buying 14 calls this week and, crazy stuff like that. So it all comes down to the game plan, all comes down on these crowded names. I always I'd rather be a little bit late. And I say this a lot, but I'd rather be 50 cents or $1 late than, 2 to 5 too early, something like that. And I think that if you let things play out, you'll find yourself, in a much better spot as far as being more confident with the trade on these overcrowded situations. The only times that I get super confident or aggressive, and PIRS, PIRS this week. I could have been a lot more aggressive. I wasn't. It was a good trade, but probably about 25% of what I'd probably size. That was something by looking left, looking at the daily chart, looking at how it had run last time, and getting confidence from that. And the PR, it stops going up. It had resistance at VWAP, and it ended up offering a pretty lucrative trade. And so you could call that one a little bit crowded, but at the end of the day, the price action had confirmed 9:45, 10 a.m. plus that it was staying heavy under VWAP. How to stay disciplined and consistent in trade risk management. How to get over one's own ego and cut losses when they are small, especially for a small account. So, this is obviously big for everybody, and it's going to happen at every single level. And sometimes you need to experience losses. What I thought was my biggest loss, is how am I ever going to recover from this? And you go through all this process, but once it happens, you can actually you can handle swings and losses and other things like that more because you've already seen it before. You've already been there. You know how to react in certain situations. You know how to reset. So, for me, I think it's very important to make sure that you are learning from it. But just remember, you've worked hard to build your account. So when you let it go and when you get a little bit of lazy or see what it does or I know I shouldn't be in this trade, but I'm gonna wait around anyway, or I've never seen this before. This doesn't make sense. If it doesn't make sense, just get out, right? Or like, oh my gosh, I can't believe this thing is still going. Like, how much higher can it go? Why am I shorting this thing? And yet you're still short. I think that these are all kind of key triggers and things that you need to listen for when you're trading. And if that happens and you're not comfortable, I've said this before as well, if you're on the edge of your seat and you're not comfortable on a trade, you shouldn't be in it. You shouldn't be in it because that's when bad decisions happen. And what happens is when you have the most exposure and these stocks are doing the craziest things, that's when losses compound. It's not when you're within your means and you've got your $500 or $1,000 loss, whatever it may be, or 5K or 10K, but it's when it's 10 and then it goes to 20, 30K real quick, or when it's 100K and it goes 200, 300K real quick, right? So that's where the issues are, and that's when most of the losses come from. It's not by us keeping our risk in check. It's on that outlier move where we're uncomfortable. And once you hear yourself or feel yourself having any of those kind of thoughts, you have to have that alarm go off in your head and say, all right, I'm just going to get out, reevaluate. You can always get right back in. 3 seconds later, you can get back in if you see what you need to see to get the confidence that it's going to go down. But I'd rather you be out than wish that you were out. So keep that in mind, but don't forget, you've worked hard to build your account. You've worked hard. That graph of all this grinding that you've built over time, that's a lot of work. And for you just to have one of these pullbacks, it's not worth, all this time is now wasted. What else could you have done with your time? And so it's very important to always have that risk in check. It's not about the gains in this business. It's always about what you do with your losses. And if you don't keep them in check, you won't be trading very long. And that's why a lot of people, always, like I said last week with Cohen and all that, they always kind of push out the reasons why they're losing to other people, but they never reevaluate. They never actually evaluate why and what the reason was. And when that happens again, you're not going to have a reason for it. You're not going to understand that, hey, last time this happened, I felt this way and it wasn't good. You're not going to have that lesson because you're always blaming other people or looking for, outlets to blame. So make sure that anytime you're in that situation, anytime that, the ego gets in the way, just remind yourself what happened last time. And you don't want to go there. Remember, it's all about firing all cylinders. Last one that came in, can you talk about more about breaking the micro mentality you talked about in the room a couple weeks ago. I'd love to break it myself. So, it's funny because some of these trades right now is the micro, like you've got to have a much smaller time frame. And I think I've done a pretty good job at identifying the difference between the two, right? So if you're trading Wish or SPCE, it's okay to be on the contrary, right? It's okay to be fading it. But when that trade happens, if you're on the front side, you need to take it, right? You need to have more of a micro mentality. But the point that I was making last time was as you progress as a trader, you're going to need to continue to build this out on a macro level, right? And you're going to add in different types of strategies. You're going to add in more risk. You're going to add in all these different things. And it's going to pull you away from this in, out, in, out, in, out. And when people send me their charts, it's almost like they're out before they're in, right? They're already so eager to get out of the trade that when they get in, I can only imagine the emotional involvement. So zoom out a little bit. Look at the daily chart. Look at the intraday chart and look at where the support was and start thinking, what am I willing to risk to be right on this trade? I think that this could go, up $1. I'm willing to risk 25 cents and let that trade work. So many people just get in, bam, next candle, they're out. And maybe they don't sell it all, but they sell most of it. And they were right all along. Trading involves risk. You have to be okay with being wrong, a little bit of the time. You're not always going to be green. I really, really try to scale into winners and not, scale into any of the losing side, which for me, it allows me to keep a lot of losses to a minimum. But, you gotta let these things wiggle. You gotta let them move. You gotta let them kind of define the range and break out of the range and then scale into that trade. If you're too tight, if you're you've got micro mentality, you're just going to be scalping. And scalping, you can do great with it. And you can build an account and that's great. But then you're gonna unlearn all of that stuff later on. Because as you progress as a trader, you'll realize that you can't exponentially grow that. You can, but there's gonna be one trade that takes you out, right? Because you're just exponentially sizing in. And then it's that one that doesn't do what you think. You've got too much size, you're on the wrong side, and you're smoked. So the way to exponentially grow, the way to really create wealth over time is by thinking about big picture trade, letting trades work for you, and getting out of that, I got to be out as soon as I get in mentality. So that's it for the questions that were sent in, and I will go over what I am looking at for the week ahead. Once again, it's going to be another one of those weeks where, I've got some ideas, I'm familiar with charts, I've got some great swings going on, but I think it's going to be like what happens on Monday. What's killing it off the open, and just like on Friday, we had PIRS and OSMT. Those weren't on scan. Those weren't PIRS actually had the swing long and then flipped to the short side. But OSMT, fantastic opportunity, but it came from pre-market. So I think that scan is good right now for thinking about more of the bigger picture type trades, some of these long swings, and things like that. But as far as what those main watches are going to be, there's no A+++ setups right now. SPCE is going to be a great trade. And whether or not that gaps up, gives a nice parabolic, or gaps down and reverses, we don't know yet. So we could have it on watch, but we can't really be 100% ready for, this is the trade I want to take until we see the action on Monday morning. So anyway, let's go into the second part of the scan and we'll cover what I'm looking for the week ahead. All right, guys, so this is the second part of the scan. Once again, make sure you like and leave a key takeaway. All you have to do is put the timestamp of your key takeaway from what we talked about in the last segment. That could help somebody else. That also helps us put out those micro content pieces that you see that people are absolutely loving. So I do appreciate you guys doing that. It helps us. It helps you. And hopefully you do have some type of key takeaway each and every single Sunday. First and foremost, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. We say the same thing every single week. My goal here is to show you how I'm preparing for the week ahead. And hopefully it'll help you prepare, whether it's these names, whether it's other names. But you can kind of see what I'm looking for, how I prepare for potential trades. And at the end of the day, I just hope that it ends up making you a better trader. First and foremost, SPCE. Crazy breakout on Friday. This was actually the textbook long perfect opportunity that I normally would take, and I had a couple good trades on it, and it was a great opportunity off the open on the short side. I was up a lot, minimized the trade, and had some pretty good entries, good opportunities, and I think most importantly, good conversation in the room. Just kind of protecting and reminding people what key levels were. Even into the end of the day where, I had reminded folks that, it's still over VWAP. It did this little walk down, and just like we were talking about in the first segment, did a nice little walk down and then started to go a little sideways. And then, it ramped all the way back up to, where it was from, where it had pulled back from. So what I was talking about with a textbook long, normally I look for, this big action off the open, pull back and trap into 9:45 a.m. and then launch after 10 a.m. Picture perfect, VWAP reclaim, zero reason to be short. The trade that I took, I had some pre-market just kind of dabbling in there, not really much size. I just knew I wanted to be present. And then we had a perfect looking left kind of trade, and you can see it went right back, retested the pre-market highs, and then slammed right back down. Great trade opportunity. But the part that I ignored, and I locked into the flush and then ended up minimizing the heck out of the trade, unfortunately, because I came in with that sort of the bias where I had the right trade. I scaled in nicely. I nailed it off the open. It was really nice. And instead of seeing that it was doing exactly what I had mentioned, right? We can make a perfect call and not trade it, right? SPCE, my goal was ideally it pulls back, traps, and it goes 50-55. Did I get long? No. And, it is what it is. And it perfect, nice consolidation. You can see each dip getting soaked back up and then ramps back up over VWAP. This is the setup that's been working on everything. Clove, Wish, AMC. We've seen it time and time again. And they just bring shorts in, start to soak it, and then press. And, this soak is where they kind of trap because they're not in a rush, but they let it pull back, soak it back up. Pull back, soak it back up. And sometimes people don't realize that until it's too late. And then all of a sudden it's $1 or $2 higher. The other thing that was interesting about this one, like I said earlier, obviously we had this slow, steady kind of grind down, but there was no real exhaustion candle. There was no flush, right? It was just a steady grind down. And then it starts to go the other way. There's still no reason to cover, and then bam. Everybody that was short, everybody that was leaning, everybody that was scaling in is now in trouble. So I think we did a pretty good job navigating that in the room as far as suggesting folks to make sure if they were fading it, it is over VWAP, it is holding trend, and most importantly, it held the prior levels of support. If you look back, it held this level of support to a T. And I think it's super important to always be looking at intraday levels and what can help you with some type of defined trend. The other thing about it, held a 20 EMA all day, except for maybe in this little spot right here. But on the way up, it never breached it. So there's all these different things that you can look at to kind of help you with this type of trade. But for me, getting prepared, looking for a trade on Monday, ideally we get some type of 62, 65 parabolic. I think the 60 short sellers, or call sellers rather, are going to be in a little bit of trouble if it goes wild over this weekend on the message boards, I think everybody's going to be excited. At some point they're going to raise $1 billion, and that could be a short thesis for a lot of people, and they feel confident being short, but then it ends up doing some type of gamma squeeze or whatever, and they're unprepared for that, right? So be cautious on the front side. There's going to be a great trade here, but don't be afraid to trade it. This is not a small cap pump. This is 200 million shares. So when you get that trade and say you get a good entry and it flushes out fast, there's a better chance that it's going to start to get soaked up and grind or consolidate, head sideways, than flush out again in a similar manner. So be cautious of being overconfident and being too patient. I think is the most important thing here. Just like Wish, just like Clove, just like AMC, you can crush that short trade. But if you overstay thinking you're going to get more, you're going to get less. You're going to get less. There's been so many minimized trades on my side. I've had huge AMC and Clove and Wish trades, and then it's a matter of a little reversal, consolidate, reversal, and you gotta go ahead and just be okay with moving on. Otherwise, it's gonna go right back to your entry, and it's just not worth it. So that's the goal. Higher the better. Ideally 62, 65, and maybe a pullback to 55 to 58, something like that. But we'll see. I mean, it had a lot of volume. It's a pretty big move off 17. So, and it's a pretty big deal for them. So we'll see what happens. And, who knows? They could have blown out everybody on the Friday. Maybe it was just some crazy squeeze and then that's it, So don't throw that thesis out, right? What if we have trouble at 55 and it just fades back to 50 to 48? So that's why Monday comes in to play here. I don't know. Are we going to open at 60? Are we going to open at 55? We don't know yet. So let's see. And then we make the plan pre-market on this one. It's hard to make that call. Wish was phenomenal last week. Nice. Wow, I can't type today. Last try. WISH. Phenomenal trade. Now it's starting to get into a little bit of consolidation. And we had that big flush out. I said the floodgate area was right around the 1310 to 1280s. And you can see as soon as it busted under that, you can see the volume associated. This candle right here, about 3 million, it was 2.7 million shares, and it went right into that level. The low was 1278, flushed out. And this is what I'm talking about. Absolutely crushed the trade. Flushes out, consolidates, starts to rebase at that 1280 level, then rally back. It holds view up. You have to trust the trend when these things are 100, 200, 300 million shares trading. They're not just going to go and pull back like a small cap trade that was just a one-time pump. These things are real liquidity, real volume, and the days that it's going to unwind are the days that it's failing to follow through. The trend is failing. Nobody's home. It's just slow, steady unwind. The days that it has these fast moves, like I was replying to the first question that we had, the days that it has these flush moves, this type of trade, they end up coming back a lot. So just be aware of that. Clove would be the other main watch. It's been okay. I didn't really trade it on Friday too much, but good opportunity so far. I'd be looking forward to potentially come back towards the 1320s and then fade off from there. To me, I feel like we might be in that slow, steady unwind back to 8. And whether or not I really pay attention to it, it just depends on how well we open up and what the opportunities are. I don't want to trade these every single day. Wish is not a trade every single day. Wish is the days that it stays heavy and it opens weak and it unwinds. Yes. The days that it breaks out and squeezes and has some huge move. Yes. But the days that it's just consolidating in this pattern, if you're trying to size in and nail and predict which way it's going to go, you're going to get chopped. So yeah, these are watches, but we have to wait for the opportunities. And if you don't, then you're going to get chopped, like I said. And I think a good example of that is on ATOS. You had the intraday move, and the same thing with EXPR. Both very similar trades. You had a breakout, you had a squeeze, you had a grind, you had a squeeze, you had a parabolic move. Parabolic moves on these types of trades, I love. And keep in mind, there's a difference between a parabolic move on a low float stock, ALF, or any other 2 to 5 million float type names. ALF's a little bit more than that, but there's a difference between shorting a parabolic on a trade like that and shorting a parabolic type trade on a big move on a big name like these. And for me, I still like to see the exhaustion move. I still like to see that transfer of shares before I use any real size. So you saw the trade on EXPR on Friday from me. And I think ATOS, unfortunately, I didn't trade this one, but very clean, very similar setup. You can see the similarities between these two and why they were potentially of interest. Nice breakout, failed follow through, lower high versus this prior level, and then nice unwind from there. And then the same thing, ATOS. You can tell I'm using a different keyboard. Right here, you can see the failed follow through momentum right there. And then the basketball analogy like we talked about, and then completely unwound. Obviously, this was after hours, but still nice opportunity regardless. Both of these, higher the better, look left. Ideally, it goes back up towards these prior levels of sort of resistance or was support, but maybe becomes resistance. Same thing, EXPR. Hopefully, it goes back up towards VWAP levels, maybe a 750 open, pushes out a little bit, and then looking to potentially fade. But solid chart, and I feel like this is kind of like one of those meme type names where focus on the big moves. This may not be a trade on Monday beyond morning shove, pulls back. It might just consolidate all day. So you've got to know when there's an edge to trade it and when there's not. And if you're trying to force a trade here, you're going to get chopped up, like I said. So same thing with ATOS. There was the big trade. So for these two, I'd be watching for either a gap up and failed follow through or a weak open failed follow through. If they start to consolidate, off radar. Wait for the next setup. Peers was fantastic. Peers we went over last week looking left. This is a perfect opportunity looking left. Pre-market went right into this resistance over here, went a little bit higher. Then it peaked out and put in a nice top right at that same level. Same daily level that had resistance the last time. We talked about that pre-market on the broadcast. We had 300 million shares this day. We had 115 million shares the day that it went over 5. As I said in the morning on the broadcast, it was not tracking to break that kind of volume. And therefore, for me, it's a high conviction type trade. Again, I should have been a little bit more aggressive. I wasn't, but still, as you can see and saw on Friday, it was a nice short opportunity that I was able to take part in. You can see the VWAP resistance kind of coming into play here. Great opportunity, and hopefully we have some more of that this week. GOED was a nice one this week. Straight up off the twos. They did a huge raise at 225. They did change the company here. There is value here now. So that is the other side of things. But whether or not it continues to go, hopefully it goes 455. We'll see. But I do think that once the volume slows, which it already has a bit, I think that once there's a reason to sell, we might trickle back down to 380s. And I'm not saying it's going to go to, 0. I'm not saying, it's not worth it here or any of that, which is always the confusion when, you end up thinking about a contrary position to, the move. But I do think that there's going to be a period of consolidation between 350 and 380. And that's all I'm looking to take advantage of. And it pulls back, consolidates, and then maybe it breaks higher. Maybe it goes to 5. Who knows? But I'm just looking to take advantage of that pullback opportunity when and if it comes. OSMT, nice gap up. Again, looking left, right into the daily chart resistance. Pretty nice opportunity. Again, I didn't size the way that I should have. I was focused in other areas, but again, it was still good. Nice failed follow through setup. Nice failed follow through momentum. I waited for things to settle and then put some on. and ideally we get a nice retest back up towards maybe 380s, maybe 4s, something like that, and then potential fade back. Next part of scans, continuation. As you guys know, I always split it: main watches, failed follow through, continuation. Those are the setups. That's what I'm looking to trade, or how I'm looking to trade. But MRIN, another nice one. It's been squeezing shorts like crazy the last couple days. Caught shorts off guard this day, squeezed them out, and then I feel like they really repositioned once again. It should have died. It didn't die. Came back up, squeezed out again. So I've locked in to both rips, and as suggested, adjust risk along the way. Anytime you've got these high flying names, a lot of them are not going to do these black swan events that you want to happen. So we all end up overholding things because, oh, well, this one just went to the moon, so I'm going to hold this one in case it goes to the moon. More often than not, that's not going to happen. So it's always good to adjust risk into huge moves, especially if you get $1.50 to the upside. This one, clearly 430s, probably a big level, 420, 430s. I think we could see a big 4 a.m. open. And whether or not that holds, we'll see. Whether or not they kind of float it down into 7 a.m. and then lock shorts from there, we'll see. But great opportunity so far, great trade, and if it continues to hold, then hopefully we continue to have some good opportunities here. And currently long over the weekend. I had sold some after hours, I sold some into the rip, but letting that good trade work. Dare has a few catalysts this week within the next, I think, 4 or 5 days. A lot of things are expected. A lot of times they like to PR pre-market. So this was an idea from 2 days, or Thursday or Friday. There was a buyer in the tape. I think it was Friday. Steady buyer throughout the day. And then it started to speed up towards the close. So we're in a market where maybe we see a huge gap up pre-market one of these days. Maybe it gaps up to 250, does something wild, and then potential fade back later on. But currently positioned here. Nice idea in the room on Friday as well. MOXC, you guys have seen this one, I'm sure. I positioned in, and I've been swinging it since the teens, mid-teens, a little bit higher, like 17 or so. Had scaled in, and then sold all of the day trade and all that stuff the breakout day. And then I'm continuing to hold a core swing from cheap. Whether or not that's a good idea yet, who knows? It could be like Playboy, where I overhold a portion of it. You never know, and you're not gonna trade everything perfect every single time. But if 20 to 22 starts to kind of base, then maybe we have that secondary squeeze out. I feel like shorts are still very aggressive here, and it just keeps on kind of coming back. Maybe we have that big blow off move towards 30, 40, something crazy. We'll see. Game should look familiar. This is the MLLF, which was the uplist. I was in mid 9s, as you guys know. Actually ended up coming back in a little bit, and then ramped up to the 13s. So again, it's always good to adjust risk, as I always say. Anytime you're up, nicely, almost $4 a share, it's always good to adjust risk and make sure that you're still trading your plan and trading it properly. ZME, but for me on game, I'm gonna let this thing work as long as it wants to work on a decent sized core. ZME, still not enough volume, but the last couple days they keep on scooping. I've seen buyers in the tape just kind of grinding it up all day, so keeping an eye on that one. FWP, there's nothing to really shout about here, but what interested me and what I look for is, it almost was like they were running an algorithm this day where, this is a tiny float type name and it traded like 1 million shares. And I feel like somebody has been positioning, and I just want to keep an eye on it and currently have some, but if it continues to kind of grind up, then I'd be interested. And we've seen stuff like this on, like AWX, you see like the load, and then you see this bidder come in. You saw that on APOP. There's like a bunch of other ones, but I kind of look for this type of stuff. I'm drawing a blank on the other one. A something. It's been a swing idea on scan. But that's what I look for, and then I look for proof that it wants to continue. AUUD, small position, letting this one work. Nice breakout so far. It's been a nice swing trade idea from low. But as always, it rips and it pulls back. Rips, pulls back. So there's nothing wrong with locking around a core. ADMP, beautiful daily chart breakout so far. I have a small position. I didn't position it as much as I would have liked to, but great chart. So I'll be watching. If it starts to break out over 130, I think we have a potential for a nice breakout. Last but not least, VTNR. I traded this one on Wednesday in the room. Big picture idea. I sold some into the rip, and I'm currently holding the rest. This is, all the way back. Huge volume. Comes back, and then all of a sudden we go from 7 to 950 like nothing happened. So we're already back towards the highs. So trade like this, if we were to open, if there was some type of news event and there was a ton of volume and it was like 10 or 11, I'd probably sell and fade it back, look for the short. But for now, potential grind until it speeds up. So that's it. That's what I'm prepared for the week ahead. And hopefully you guys found value here. As always, leave a like if you could, and leave a key takeaway. Write your timestamp. It doesn't just help us. It helps you. It helps others. Maybe have some key takeaway, key moments, aha moments. And that's about it, guys. Let's finish the month off well. We're heading right into summer right now. I think that's about it. So once again, we will have some news here soon with the Wall Street bets and some Twitter type stuff, as well as other social things that we're paying attention to. So stay tuned on that, and otherwise have a great weekend, and we'll see you in the room tomorrow.